question from the forum, taking profits to stablecoins. This might be a primitive question, but is it a bad strategy to sell all my portfolio near the top of this bull run and convert it to stablecoins and then refill my bags in the bear market to maximize my holdings? Great question. Great question. I'll preface this by saying, first of all, this is not financial advice. We can't tell you what to do. We can just tell you what we personally do. And then this is also not tax advice. But me personally, I'm trying not to sell, right? Because in general, the thesis is this: crypto assets will increase in value long term compared to holding cash. So unless you need to buy something to cash out, whether it's buying a home for mortgage, paying off debt, student loans, beginning a business, or just buying yourself something nice, unless you have to cash out, why cash out, right? Especially me, because this is not my first rodeo in crypto. I've already made my money in the last market cycles, and now I have some room to hodl even longer. But let's say this is your first market cycle, then definitely take some money off the table. But to me, the way I viewed this is, I think Ethereum is just getting started. So I don't have any plans to sell my Ethereum. If anything, the new model, well, not really new, but I think it's getting more popular now, especially thanks to DeFi, is being able to leverage your crypto assets and borrow against them. So what I did about a month ago is as an experiment, I used Liquidity. I deposited about $50,000 worth of Ethereum, took out about $22,000 in their stablecoin, used that to cash out to a different stablecoin using Curve, basically to DAI. Then I cashed out at Coinbase Pro. So that's how I cash out, because I still have my Ethereum. It's locked in a smart contract. So I have the upside. I haven't sold my Ethereum. I still have that upside, because if Ethereum goes to 25,000, or if Ethereum goes to 100K eventually, sometime down the road, I will never lose my Ethereum. I can always come back, pay off the loan, and keep my Ethereum, right? So that's why, to me, it makes no sense. Because imagine this: imagine being the person who sold Bitcoin at $10, $100, $1,000, even $10,000. I mean, why sell? Because if you're in this for the long haul, you can borrow against it. So I think borrowing against it is a whole new concept, especially that it's, obviously it depends where you are, but at least here in the US, borrowing is not taxable, right? You don't pay any capital gains taxes, and that is a lifesaver. Honestly, I mean, that is worth its weight in gold, because last market cycle, when I cashed out, nobody told me about taxes. So having to pay capital gains taxes, you were like, holy moly, I'm paying more taxes than people earn in a year. And that makes you think twice, right, during this market cycle. So especially now with projects like Polygon, honestly, I have not sold any Polygon. And quite frankly, I'm probably not going to sell, because I don't need the money now. I mean, unless it's like the end of the world, I don't need the money. If anything, I'm hoping one of these DeFi protocols will add Polygon as collateral, so I can put it in a smart contract and borrow against it. Now, I believe Celsius might also do this, but I have to double check. I'm not looked into it too much. But essentially, all my large holdings that I think will have value in the next 5 to 10 years, I have no intentions to sell, right? So Ethereum, no plans to sell. Polygon, no plans to sell. Helium, honestly, no plans to sell. Because I think Helium can enter top 10, top 20 territory. Right? And so far, it's been climbing. Based on market dominance, last time we covered it, it was around 80 to 95. Now it's at 60 market cap, I believe, right? So it's been rising through this downturn. And if I think it's going to go to top 10 market cap, why would I sell? If anything, I would just hope it gains more market dominance, and some exchange allows you to borrow against it and get DAI or stablecoin or Ethereum, right? So that's my strategy. Let's go to Forrest. How about you?
Yeah, so I mean, the way the question is phrased, I mean, is selling at the top of the bear market and rebuying selling at the top of the bull market and rebuying in the bear market smart? Yes, absolutely. But how do you know when you're at the top of the bull market? That's the $1 million question. If we could all sell at the tip top of the bull market every single time with 100% accuracy, then absolutely, I would say sell everything at the top of the bull market and then wait, a year and then rebuy everything, right? In a bear market for 50 to 90% off, right? But like Ian just said, we expect crypto to continue to grow exponentially. It's been growing at an exponential pace for the last 7 years. So it's difficult to pick the very top and not be the person who sold Bitcoin at $1,100, right? Even if you sold it at $1,100, which was the peak, I think, of the 2013, 2014 market cycle, if you didn't get back in the bear market, then you missed out on it going to $19,000 and then $64,000. So yes, selling at the top is a good idea. It's a matter of, how confident are you that you're at the top? The other thing is, I will say, I like to be a little bit more active when it comes to managing my portfolio in and out of stablecoins. I don't think that having 10 to 40% of your portfolio in stablecoins at any given moment is necessarily a bad idea. I like to buy at the bottom of the channel, as I mentioned in the earlier segment, and sell at the top, take profits at the top of the channel, right? So there's lots of cryptocurrencies that are channeling over time, growing exponentially on a logarithmic view, right? And you can buy at the bottom of the channel and shave some. You don't have to sell everything at the top, but you can take 5, 10%, maybe your initial investment out at the top of that channel. And then there's tons of opportunities for yield on those stable coins. You can earn 10 to 15% on a lot of these centralized lending apps. Alpha Finance, one of the reasons we're so bullish on Alpha Finance right now, you can earn on your stable coins 24% on Tether and USDC, 38% on DAI and USDC. If you go through the Curve 3 pool with your stable coins, 69%. Right, so you're getting 25% in terms of back in stable coins, and then you're getting additional APR in terms of alpha tokens, right? In the form of alpha tokens. So if you're going to get involved in DeFi and do the work, and you're playing with enough money to actually make use of your stable coins, I don't think it's a bad idea to have that dry powder on the side. And then with a nasty dip comes like this, you have 10 to 30% of your portfolio to throw at this dip and ride it back. But I'm generally in agreement with Ian, where you don't want to be the person that sold Bitcoin at $1,000 thinking that they're rich, when in reality it ends up going to $64,000 or maybe $100,000 here over the next couple of years.
All right, thank you, Forrest. Let's go to Bill. How about you? What do you think?
Okay, well, the short answer is what they said, but let me break it down. So if you did a trade and you know that you chased the meme coin and you got hosed, not financial advice, but if you know you did a bad trade and you know which ones are bad, then take the loss and clear your head. You have two assets in crypto: your trading capital and your peace of mind, your spirit, or your mental state. It's as simple as that. So if you did a bad trade, get rid of that. Take the tax loss. Now, if you have quality, things like, where Ian is talking about borrowing against it, something that you think is going to be good for the next year or 5 years or 10 years, totally makes sense to borrow against that, not financial advice, or flat out just hodl it. Because you got to remember, if there's a problem with the dollar or a problem with Bitcoin, potentially, right? We know there's going to be a problem with the dollar. There might be a problem with Bitcoin. Something is going to benefit from that. ETH, Cardano, who knows? Matic, Helium, your coin. So if you have quality, I would try to hold it and hedge, like buy gold, short stocks, do something to protect yourself. Now, if there's a big rally, okay, you can ask yourself, okay, if I'm asking, should I have stable coins? You probably should have some in stable coins, right? If everyone says, should I sell? I'm like, well, you don't have to sell it all, but you need to sleep at night, right? The best portfolio investment allocation, bringing back the saying from 2019, is the portfolio that helps you sleep at night. So if you need 25% in stable coins to sleep at night, not investment advice, but sleep at night.
All right, thank you, Bill. So actually, our comments in the comments, people are saying you can definitely leverage Polygon as collateral in Aave and in Celsius. I've taken a quick look at Aave. I'm not seeing that available. Maybe I'm looking at the wrong thing. I know they do have integration with Polygon in terms of scaling, but I just checked out Celsius, and it is available, right? If you go to Celsius, click on borrow Celsius.network, and you can actually choose Polygon as collateral here, right? So technically, let's say I wanted to borrow $50,000 worth of USD using my Polygon as collateral. You can choose the loan term up to 36 months, basically up to 3 years, which is not shabby. And basically choose here all the options. They have Polygon and all these other tokens. So you can then choose the LTV, loan to value, right? So in this case, I always like to play things safe. So let's say I wanted to borrow 50 grand worth. So basically you'd have to deposit 200 grand worth of Polygon. And this is how much you would pay in interest if you paid in cash. Now, if you own the token, you actually get a lower fee. But I'm not sure if this works for people in the US, because I know they kind of had that issue upon launch where Americans technically couldn't own the token. But anyway, I'm definitely going to have to check this out even more. We've covered this product a lot, but I've actually rarely used it. But now, as Polygon is going up, if I do have a need to borrow against it, looks like Celsius is definitely the way to go. And this is the APR 0.75%. Now, this is per month, I believe. Actually, no, I'm sorry, per year. But this is the cost per month. Anyway, I'll go through the numbers. Heck, maybe that could even be an episode for Moon Mission on Token Metrics TV. Maybe I'll go through an example and actually show how I would use Celsius to cash out without actually cashing out. And legally, not tax advice, legally minimize our tax footprint. Not tax evasion, minimize our tax footprint legally. So if you definitely enjoyed that, definitely stay tuned. That could be the next Moon Mission episode. Thank you for that question.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.